Good evening everyone, welcome to a new video. In today's video we'll do some technical analysis, but we'll also create a new algorithm for the BTC USDT trading pair, the golden algo that I've shared recently. So it will be a pretty long video, let's just get into it, starting off with some technical analysis. I shared that I got stopped out yesterday. I didn't expect us to break these highs. I had my stop loss at 88%. So I got stopped out about here, and we took out those highs barely, and then made the retracement that I was personally looking for, which makes me a little bit not willing to take the long as much as I was before, but of course I will still take this retest here because it just looks amazing in regards of the EMAs, how they're stacking up, how the 21 is coming in for that 144, the crossing point. Yeah, this just looks really amazing. I mean, we have a lot of new members in Discord, so yeah, let's take a manual trade and show you guys how I would personally go about it. I mean, I will keep it really simple. So just like here, I have about $100 on this account. So okay, I took my entry, and I'm not about like exactly right away putting that stop loss. That's fine for me because I have this area right here that I'm interested in seeing a reversal. So I'm basically stepped into the position right now, and now I will wait a little bit and see how this forms within my area of interest. Okay, these three levels are just way too close to each other to trade them individually per se, in my opinion. Okay, so I rather wait a little bit, see how this forms. We can see there is a nice point of control here, right in between that 21 and 55 EMA. So that's a really interesting area. I do at least see a bounce coming here, and then I can always decide to decrease my position at that point, and ride it up as high as I see it going from there, right? So just a quick entry there before we get into things. That's the BTC trading pair. Let's just have a look at some other charts. Of course, I shared with you guys yesterday the Ethereum BTC valuation. Very important to keep an eye on. Pretty much this is how you can basically see what the altcoins are up to, right? And currently that valuation is at let's say equilibrium, right? And it's hanging on a thin line here. Okay, this could very well drop down because we're at the point of control after a retracement, after a double retracement. Of course, we have some support here, but it definitely looks like this has a bigger chance of going down. If we were to go up, I gave you guys the area right here because we are zoomed in here. So if we zoom out a little bit, then there is a chance we shoot above this area. Then we have the liquidity zone here. But overall, I'm not so confident in ETH BTC. So that's just my 2 cents on this, but I did tell you guys that if we were to break that area, then we have to start being cautious, right? But because the point of control is right there, we cannot be bullish on ETH BTC, and from that moment onwards, it's making its way back down. So that's let's see if that indeed comes all the way back down here. Here we have ETH USDT. Okay, it's going a bit deeper than I was initially expecting it, but I do expect another wave up here as well if Bitcoin makes a retracement. And so this is also getting to a nice area. I am a little bit concerned about it losing the point of control, but as I showed you guys, it's heavily tied to ETH BTC valuation. Okay, so ETH USDT doesn't make a whole lot of sense to do a lot of charting on, in my opinion. It's better to do that on BTC USDT because we already know that this is going to probably lose value. So yeah, the reaction here could be a little bit, or the price here could overreact to what's actually happening on the overall market, which we can clearly see on BTC USDT. While we have touched and kissed the 21 EMA, which is really nice to see. Always nice to see our levels respected one by one. Okay, first we stopped a little bit at the 144, then we took a halt here, and now we're stopping right at the 21 EMA. I do have a lot of lines here, of course, but yeah, it's just a very important area. So let's see how this forms over a couple more candles before we can actually make a judgment if there is a reversal forming or if this is just going to continue back down. Okay. I mean, I don't mind getting more in here, but I do want to show you guys the safer way of trading, right? So you could ladder in another 1,000 contracts, okay, then you would be at 2,000 right here with a better average entry, but there is no confirmation yet, okay, not enough at least, and we could go down in time frames. Look at what we're seeing. What we're seeing right here. We're definitely seeing that the candles are stopping, and yeah, there's not enough for us right now because of this purple one, and just hope we get a little deeper and then make some bullish price action structure before I actually make a good add on the trade and then wait for higher. Anyways, let's go into the algorithms and see how we can create an algorithm for BTC USDT today. I have it in front of me right here for Binance at the moment. We want to do a small backtest for the last month probably and just see how it has been performing. Okay, 5% up, 50-50, not the greatest, but and a pretty big drawdown, 24% drawdown for 5% profit. Let's see if a little bit longer backtest will get us better results. Yeah, definitely. So 2 months you'd be up 66% with the same 24% drawdown. So that 22% drawdown was pretty recent. Let's see if we can kind of find out when this would have happened. All right. All right, so at the beginning of November, we had the big drawdown. And let's have a quick look what the events were. It's basically on this big drop, I think. It's prior to this big drop. It's probably here in this range. Okay, let's have a look. Yeah, that's not great. We take a long here, exit long, open long, get stopped out here, and get stopped out here, then get stopped out here. So 3 stops is our drawdown there. This is a good one, so that's not a stop loss. Maybe here a couple stop loss. Okay, so that's our worst period. It's 24%, but over 2 months we would be making 66%, which is not bad at all. Let's do 3 months. 145. That's pretty nice, right? So 3-month period, 145%. So 24% drawdown, 145. That looks pretty nice. Let's go over individual signals and have a quick look at how they look like and how the percentages are in regards to risk to reward here. Okay, so here we have a trade. Target is 0.8, stop loss is 0.5 and 0.15 as a wick area. Okay, so I'll do another one. This one is 1%, 0.7 and 0.15. All right. Uh, 0.9, 0.5. Okay, so we can see that our target is about 1% away. Our stop loss is 0.5%. That's the ratios that we got to work with. And why? Yeah, we're going to keep it simple. Why? Because the normal algorithm will give us the take profit. Okay, so we get a signal from the indicator when the actual take profit is reached. So we don't need to really have a fixed rate for that per se. And for the stop loss as well, if there is a stop loss, we get the alert from TradingView. Okay, so this is just going to help us decide on partial take profits, ping pong strategies, and just some more active trading to get a better position in every signal. For example, let's oh guys, we're getting in a long signal. Let me send out a message to the group. Guys, we'll get to your questions in a second. Getting in a short alert on ETH, guys. So a quick look at our charts, because we also had a trade, so we need to know where the price is at the moment. So we have a little bit of an up move here, but yeah, we'll just let that be for now. That's fine. We get back to our strategy development. So we know that we have about 1% target and 0.5 in a stop loss. We know that we want to enter right when the alert comes in. Okay, that's our first thing that we should remember. Okay, so let's just make an imaginary trade here and kind of go over what it is that we want to do. Okay, our imaginary trade is a long, and let's put this on 1% and this on about 0.5%. And then we're missing this wick area of 0.15. Let me just draw that on. Okay, so then you have this little orange area, little orange box. Okay. This means that if the price is coming here, and here we get the alert, right? So now a signal is sent to our bot. It is very important that we take part of the position directly, okay? Because we don't know if the price is going to shoot up directly. So we take part of the position here directly, and then part of the position will be waiting in this red area, okay? If we touch this red area, we have a bigger position. That means that some of our take profits can come into this green box. Okay, because we have a little bit of a bigger position than the initial signal has given us. Okay, this means more risk and a bigger loss if this fills. Therefore, we place partial take profits here. Okay, so if these are filled, we take partial take profit. In the scenario that we come halfway and go back, these agents should exit here again and wait here again. Okay, this way we capture the entire range that we have here, and we anticipate on a winning trade. Yeah, this will just help us overall to take more out of every trade, and this will be the logic that we will go about. In all the agents, I'll place a stop loss that's way wider, or a lot wider, than the red and orange box combined. So let's say 1%. This will just be a safety in case an alert messes up, that we don't risk way more than every trade should be risking. Okay, so that will be the way that I will go about creating a strategy right now. And for me, the easiest way to do this is, for example, take out some of the tables that I've shared, which is called the agent tables. It's shared in Discord, and you have the options to choose from manual or plug and play. For the plug and play, we have some of the old strategies. Don't use these. We have new ones, of course, but for the manual strategies, we have, for example, the stop loss tables. And the stop loss tables, if I pick, for example, one big long or one big short or half big long, they will give me tables with a stop loss, and from there I have a much easier start to create these new strategies. What I can also do is just use get long and get short, and I think that will even be easier for me. And then I changed the offsets to percentages. This way they will be applicable for both Ethereum and BTC at the same time, instead of being only available, because the low offsets are only applicable for Ethereum. Okay, so this table would only work for Ethereum. But if I start converting these to percentages and just modify the rest of it a little bit, I think this is going to work just fine. So let's just go with this. Let's start with the get long. Right, and we want all these changed. Okay, so for Bitcoin, the minimum offset, and offset is how far away from the price do you want to start bidding to buy. Okay, so for example, currently the trading price is at 46. If I want to buy here, I can wait in line. If I want to buy directly, I have to buy from this guy, right, who's selling. And the offset means basically how deep in the order book do you want to start buying, or how deep in the order book do you want to start selling. Okay, so that's the offset, and it can be in dollar value or in percentages. In this scenario, we're going to change most of them in percentages, but this is what we call a trigger agent, and I will explain you what that means. The minimum offset on Bitcoin is $0.50, so we will set it, this agent, to $0.50, and we'll set the trailing entry also to $0.50. What this will do is, as soon as we get an alert, this agent will wait $0.50 below the price, and as soon as price goes up $0.50, it will buy. Basically, it will do a market buy. Okay, because if you're waiting $0.50 below price, let's take the exchange just as an example, make an example here. Let me just, yeah. Okay, so if I would be waiting $0.50 below the price is 41.5, I wait at 41. I only need price to touch 42, and then I'm buying. Okay, that's a trailing entry. You need price to actually go in your direction, and then you're directly buying using a market order. This makes sure that we're not missing out on the trade, and we get in as soon as possible when the price is actually going in the right direction. Okay, so with this first agent, I'm trying to make sure that I take position, and yes, I will be paying market fees for this particular trade, but that's fine. This is to make sure that I'm in that particular trade. $0.50 minimum offset for BTC, $0.50 trailing minimum offset for BTC creates a very aggressive direct entry market order. I have a delay on profit of 5,555 and a delay on stop of 5,555, which means that if this agent makes a winning trade or if this agent makes a losing trade, it will go into timeout mode, which means it will not try the same trade again, because otherwise it will keep doing the same and it might keep losing that same trade. But these first row of agents are pretty much a one-off. And why are we doing that? Well, if we go back to how we designed this strategy, is we take an entry directly, then we put some of the DCAs here, and only the children of those DCAs, so the orders that come after the DCAs are filled, those will be the ones that keep ping-ponging. Okay? The rest of it is just a one-off trade. We either win the trade or we lose the trade. But only the partial take profits. If we come deeper in the red zone, that's when we start trying to range this trade, or at least take partial profits. Okay, so let's get back to our agent tables, and now we know that this start at short 1 is the first trade to initiate the strategy. And that's why there is no .1 extension here. This is what we call a parent. This trade needs to occur first, and then 1.1 till 1.9 can occur. That's exactly how we wanted it to be. We said that only if that first trade has entered, we start to place our DCAs in the red zone. Okay, and our DCAs in the red zone are these 9 agents, and let's give those also a different color here. Okay, so these are children of this first agent. Give me a second, need to sneeze. Never mind, sneeze gone. Okay, let's continue. Okay, so these 9 agents are the children of this first agent. Only if this first agent bought his 75% directly with the half-half offset trailing entry, then all these will spawn. And let's see. Okay, the offsets are of course set to currently to Ethereum's prices, so we need to change these. So let's just say we're going to start with 0.003%. Okay, this is just out of the top of my head. Okay, we're going to modify them later if they don't make any sense at all. But let's just start with getting something here written down. Oh, 0.5% on Bitcoin is a lot because that's our entire range pretty much. So we need to spread all of these out a little bit more. Okay, we put a percentage sign behind it to indicate that it's not a dollar value. So it's not X dollars below the price or above the price, but it's X percentage. Okay, this way the system understands that you are referring to percentages. So 0.615. I just mistyped, but it's random anyway, so who cares? 0.17. Let me just try and drag it like this for now. Okay, so now these are covering about 0.6% in range. And they're also doing dollar cost averages. So you can see actually these first two are pretty aggressive as well. Because if we look at the original strategy, which is this one right here, you can see that the first two after the parent, they also have a 0.05, in Bitcoin's case 0.5 offset. And so they are also pretty much entering directly, but with limit orders. This way we are not paying any fees. We're pretty much doing the same thing here, but now we decided that first trade is our big trade and the rest is more so to dollar cost average. So okay, something more like this. Now we can see there is more agents here, and this one has 2 extensions, so it's start short 1.1.1. Okay, so this is a child of 1.1, which is this one right here, which is a limit entry that comes after a certain DCA. But for our strategy, we want this to be a little bit deeper in the order book, I believe. Yeah, we want to be at about 1.4. So we're going to change the parent from 1 to 4 here. Let's see. Let me see how I initially thought this up. So we have 2 children, 2 children, 2 children. Okay, so every one of these, or a couple of these, let me put it like this, have 2 children. And we're going to do the same thing, but we're just going to move those children down to starting 3, starting with parent 1.3. Okay, so 1.3, 1.3, and then we do 1.5. So we skip one every time. 1.5, 1.5. Oh, 1.5 already has them. 1.6 has them, and then 1.8 has them. I think that's fine for me right now. Okay, so these are the ping pong orders that we came up with in our strategy, which means that, like we said, if the price comes in the red zone, some of these will be filled, and then their children, which are the grandchildren of the initial trade, will pop up above the price to take profit of whatever we have bought. And if they take profit, they'll try to get back in the red zone. Okay, so that's how they are programmed. And of course, I totally understand you don't understand the full picture, but I'm just trying to give you guys an idea. I mean, it can be done, and This is the only way that you will be able to create such complex order flow strategies from what I know. And if there is a better way, I would love to explore it, of course. So these are our main trade. So I just saw that this is a short. So they're all called start short, and the sells allowed are true for the main trades. So we're just going to call this already BTC short. Okay, so that we know what we're working on. BTC short. Okay, so we have our sells, and then the buys are to take profit on the sells that we've taken. So they only occur if those buys have actually been taken. Now we need a couple more things, which is we need to figure out the stop loss, and the stop loss cannot be done in percentages. So we need to do them in dollar values. We know that the maximum stop loss is 1%, which is approximately $160. Okay, so we're just going to cover ourselves. We're just going to cover ourselves for a 1% drop. And okay, the reason I'm decreasing that value is because the offset increases. Okay, so I decrease the stop loss a bit. Okay. And this is just an extra safety because the stop losses are all programmed into the main indicator, of course. 90 and 80. The children don't per se need the stop loss, in my opinion. Yeah, because they're going to ping pong anyway, and they are just take profits of the main trade. So I'll leave those as they are. The delay on profit and delay on stop remain the same. They're not for the children, but only for the main trade. So we have our short here. Let's see, 0.5. Yeah, I kind of can live with this for now. And let's go on to the second one, which will be our. Okay, and for this, it's the easiest thing is to just take over whatever we did here and place it right in here. And then we're just going to change the fact that they're allowed to sell. We move that one to the buy side, and then we take the buy side from here and move it to the sell side here. Right, so now they're able to buy and the children are able to take profit, so sell. So that's all good. Let's see if the rest makes sense. Of course, we need to change all the names, but this pretty much remains the same, so there is no need to change it. Now, of course, I made a big mistake because for the children, we also need to change all the offsets to percentages, so we'll get to that in a second. But let's first start changing the naming here. So start at short. So I just need to change short and replace that with long here. Is there no other shorts? It's just, yeah, I think this is fine. Okay, start at long. Now they're all called start at long. That's fine. It's perfect. And now, like we said, we need to change these. And let's just have a quick look back at the chart that we created, or the fake idea that we created. And let's measure how far away the partial take profit should come in. I mean, some trades, let's look at, for example, one of the smaller trades in size. Try to find a small one. Right here, seems like a tiny little trade here. Maybe that's just a visual thing, but check it out. Okay, so the entry was made here. Okay, so the target is only 0.4. Okay, so we need to make sure that we also satisfy the needs of a small trades, because small things matter as well. So let's get into that, and how we will be going about is just quickly think that up. Yeah. Right, so that's we move that also to the short. That means that I've kind of, so the further we get into the red zone, the bigger I make the offset from the entry. Okay, so what that means is, let me just try to draw that out. What that means is, let's put another long trade here. And as we have said, is we have multiple buy lines here, which are representing our agents trying to buy. And let's say the price only comes to this first one. Then what we do is we place them very close. Let's say we come to the second one. We place them a little bit further. But because the calculation is done from the point that we enter, they basically align somewhere close to each other. Okay, so they all stack up at the middle of a little bit above, and their exit multiplier is 1.1 or 0.6. So they either close a little bit earlier than the position that they entered, or they come a little bit deeper. Okay, so this way you kind of average out an entry here again, and you get that cycle, hopefully if the price ranges, right? And you can imagine that designing these type of algorithms just requires you to kind of envision how the price can move over time and what the most likely scenarios are. So it's definitely also a thing that you need to take time for, and I'll definitely improve them after the video and keep improving them. But I also want to make sure that I'm showing you guys what is actually happening when I create these strategies. This way, those of you that are interested to do their own thing can do that. Especially with the USDT pairs being enabled very soon, we're going to have a lot more available strategies, and understanding what the differences are will help you decide which one to go for. So let's see, everything looks good so far. So now we have basically an entry for our long for BTC and an entry for our short for BTC. And they're both looking decent to me, so we got to try them out to make sure that there's nothing I missed out on first glance. The trailing take profits all fine. Yeah, all looks good so far. So what I did in the account that's trading live right now is I have two market making strategies attached to them. They are based on LK's sideways strategy, and I just converted them to be applicable for Ethereum. I did it in the same way that we just basically transformed Ethereum tables to BTC tables, but LK's version already has percentage-based offsets. So the only thing I needed to do is change the 0.5 offset, which is the bare minimum for Bitcoin, to 0.05, which is the minimum for Ethereum. So this is the only adjustments that I did. And then, of course, also for the trailing entry and the trailing take profits, which are just lower values. So you want to change all of those fields, and then it was already useful as a market-making algorithm for Ethereum. So yeah, this is something we can do also. So we can create two market-making algorithms and tell. So the idea would be that after every trade, you just continue on with trading, doing market making. So whether it being a losing trade or a winning trade, you continue by just doing market making. Okay, and this is more risky. So let's at first start with default strategies and improve those. Make sure we have the right entries, right ping pong strategy, and make sure that these are as efficient as they can be. And then we can continue on with creating new strategies. So the next part will be pretty much me creating the signals for this. If you like watching that, then feel free to do so. And If not, the messages will be included with the strategies when I share them in the Discord in a minute. Okay, so you always want to make sure that in your active tables you only have the tables that you're actually going to run. Don't have anything else in here. That makes the bot a lot faster. So okay, I guess I will just talk over this as well for those that were still watching and want to know how to create those webhook messages as well. So we launched the bot up. Oh, I need to change my configs to BTC trading. Okay. Scroll all the way down to the signals. What do we want to do on a long alert? We want to activate, apply. Do we want to deactivate anything? Not per se, right? No. Do we want to close any positions? No, just want to activate it pretty much. Okay, so apply, copy. That's one. Then we go down, edit signal, reset the old template, refresh data, and create our new signal. On this signal, we want to activate, and activate, apply. Do we want to close any position? No. Copy current. Okay, now let's create the closed positions. What we want to do there is we want to close position, whatever direction, and deactivate. Should we just do both to make sure everything is deactivated, or should we do it one by one? I'm just going for both. Deactivate, deactivate, deactivate. Make sure to click here to apply the template. Oh, I missed this one, deactivate. Okay, so on any close or take profit or stop loss signal, we're just closing any position, deactivating anything. And that's it. I will share this strategy together with the webhooks right now in the Discord chat, and I will see you guys in the next one. If there's any questions, feel free to reach out to me. For all the new people, feel free to shoot me a DM. We'll get the software set up for you and get you up and running as soon as possible. Have a good day, and I'll see you guys soon. Bye-bye.